Good morning, it's Jeff Christian, CPM Group, calling you on, or recording this on Friday, the 13th of November, about 9:45 a.m. We've had an interesting week, and we'll have another interesting week next week. I wanted to talk a little bit today about our longer term outlook for gold, which ultimately reflects our longer term outlook for the economy, and silver too, if I have time. We have been talking and writing in recent months about the big three issues hanging over the world that have been supportive of investment demand for gold and silver, and consequently have been reflected in higher gold and silver prices. The first one is obviously the pandemic, and it's getting worse. It's getting worse in the United States and in Europe. It's getting worse in other parts of the world. The political will and capacity to provide the public health services needed to contain it still don't exist in the United States and also in various European countries. So that's going to continue to be a problem for the world and for the global economy. The second factor is the global economy. We're in a recession. We've had a very bad second quarter in the United States, Europe, and other parts of the world. We had a little bit of a dead cat bounce in the third quarter. We're probably going to see slow growth in the fourth quarter and going forward. But a lot of problems continue to hang over the economy, and they'll probably get worse as we go forward, not only in 2021, but for several years to come. And then the third factor is the political environment. The political environment is incredibly dysfunctional on a global basis. We have a rise of nativism, of nationalism. We have a breakdown in international cooperation. In the United States, it looks like Joe Biden will be our president, but the Senate will remain in control of the Republican Party. If the Republican Party continues its policies since 1996, we'll have a stalemated government, and it'll be very difficult to respond both to the pandemic and to the economic needs of the country and the world. The United States has lost a tremendous amount of stature in the world, and it will continue to suffer from that loss of stature. It's going to be very hard to rebuild that, along with cooperation and unity within the United States. All of that comes together and it says to investors, you should own more gold, you should own more silver. And that is likely to be reflected in stronger investment demand for these metals and higher prices. Now, some of you have heard of our longer term views for gold and silver, which is that having seen very sharp increases in prices this year, we may see the prices rise modestly or basically plateau over the next couple of years. Because we're looking at a weak recovery, because we're looking at a change in government in the United States, things will be bad, but there may be a period of time which would be a little bit more quiet, a little bit less dysfunctional than the last 4 years. And in that kind of environment, gold and silver may form a base for another round of increases when things get bad again. And they will. Our expectation, it's very hard to tell, but our expectation is 2023, 2025 may see another round of economic issues becoming more severe. And in that kind of environment, we'd expect another spike up in gold and silver demand, pushing prices probably to record levels for both metals. So that's our longer term view. In the next few months, we see the price staying strong. We see it staying strong for the next 2 years, moving slightly higher. And then at some point, we see another leg up, similar to the leg up that we've seen over the last 18 months or so. It's not just the US, you have Europe. We have Brexit coming up. It's going to be problematic. There are issues in the EU and continental Europe that have to be dealt with. Russia remains a pariah government, let's be honest. China has a number of issues. There are problems all over the world. Peru has seen a political change of government this week. The people are extremely divided. The president has been removed. He was probably more popular than the parliament that impeached him and removed him from office. They'll be moving toward an election, but I think the election's not until April. The political divisions in Peru have not affected mining yet. Peru is very important for copper, lead, zinc, silver, and gold in terms of production, as well as a variety of other metals. But it's out there and it's on the horizon, and it's something to watch, and it's emblematic of the kinds of problems you're seeing all over the world right now. I have on the screen here a market commentary that CPM Group produced in late September. And I wanted to use it because I wanted to show you something. You know, we were talking about crazy, silly things that people were saying about the dollar collapsing and how the dollar's collapse would lead to gold prices rising sharply, and also just the relationship between the dollar and gold. And in late September, we produced this market commentary. We talked about how, yes, gold prices the dollar had dropped a little bit on a short-term basis, but if you look at the dollar trade-weighted basis against the euro, against the pound, against the yen, what you found was that the dollar was still relatively strong. And our expectation has been that the dollar will remain relatively strong. In addition to that, I want to show you on the second page, the relationship between gold and the dollar is not nearly as concrete as people think. Over time, the correlation between changes in real inflation-adjusted gold prices and real dollar, trade-weighted dollar, has been about negative 33, negative 34%. So 2/3 of the time, if you're trading gold against the dollar, you lose. There are times when both of them are safe havens that people flock to. There are times when they flock to the dollar or they flock to gold, but not the other one. There are times when they move in disparate ways. There are times when there's no correlation. And over time, it's not there. Going back to our longer term economic view and our view for gold, we expect problematic economic conditions to persist for the foreseeable future on a global basis. That doesn't necessarily mean that we expect the dollar to fall. Dollar could actually rise. And you can actually create scenarios where the US government got its act together. They're kind of like fantasies right now. But you can create scenarios where the dollar actually stays strong for a long time and remains the de facto reserve currency of choice. Even if you don't see that, the dollar is probably going to remain strong because consider the nature of the alternatives, as Maurice Chevalier famously said about growing old. For the dollar to really fall, you have to be really enthusiastic about the economic prospects relative to the United States of Europe. Okay, I don't have to say anything more. So we can see a situation where the dollar remains relatively strong while gold rises to a higher price. And anybody who tells you that the gold price can't rise if the dollar stays strong or if the dollar rises doesn't know the statistics behind it. They're talking about faith and beliefs as opposed to statistical realities. That's that. Now that's kind of an oldish market commentary from a month and a half ago. We will be coming out with a new market commentary on Monday, the 16th of November. And that will be a post-election commentary on the election's implications for the economy, for the political environment, and for gold prices. That's all I have for right now. Have a good weekend. Stay clean, stay safe, take care of yourself and take care of others, and we'll talk next week.